I think we're, as with all things, maybe this sounds a bit reductive, but everything that we want to achieve comes down to maybe basically three things coming together. Number one, do you have a goal? Number two, do you have a plan? And number three, do you have the persistence to execute and to keep going?
It seems like the Ericsson, you became an entrepreneur and you started, building out that cybersecurity practice. How did that lead you towards your entrepreneurial ventures? Because you really, changed tracks even after INSEAD. You started with a startup, then went to Ericsson, and then, started investing, building all of that yourself.
My role is that within the corporate environment I was working in, I was leading this initiative. It was something that was completely grassroots, bottom up. I just undertook, and I could see a pathway to getting the deal done. Right, it was just I just had a sense like, okay, there's enough here that I could like stitch the dots together.
Hi, Jed. Welcome to Network Capital. Thrilled to host you on our podcast today. You've had an interesting career. You went to INSEAD and thereafter started doing even more incredible stuff. So tell us a bit about yourself and what do you do today?
Yeah, Utkarsh, it's thanks for having me. It's really great to like reconnect after all of these years. But I think the story going back to INSEAD, after I did the MBA with some like pretty specific goals in mind. I was one of those people that wanted to make that crazy triple switch, right? From function, from industry and geography. I can't say that I switched all of those things at one time, but it's been a series of steps. But 7 years on from INSEAD, where I find myself is that I found a niche in being a venture builder, right? So I built a few technology businesses within corporate environments. Um, and my latest venture has been an API marketplace being based out in Tokyo. This is something that I started about three plus years ago. And through some growth hacking and some smart deal making, we grew this platform to become the world's largest API marketplace.
That's incredible.
Thank you. We can like jump into that more. But just to round out the story, the other part of what I do is that I've been an angel investor for the last 4 years. I very quickly got my first exit in the first 2 years. And I have another company in my portfolio that has grown from a C to Series B company in 18 months. And I think I have my first unicorn in my hands, fingers crossed. And I've now doubled down on this in 2020 by starting to organize my own syndicates. So this is a way for me to share my deal flow with other investors who are interested and they co-invest alongside with me. And I've now just very recently launched a new initiative I call Angel School. So it's angel-school.co. And this is the next chapter for me.
Wow. So clearly life after INSEAD has treated you with loads of adventures, and congratulations on all the success. Tell us a bit about your life pre-INSEAD and what were the goals that you came to INSEAD with, and how did, if any way, did INSEAD help you achieve some of those goals?
Sure. So prior to INSEAD, believe it or not, I was working in oil and gas in supply chain management. Based out of Singapore. And to be honest, I was desperately bored with it, right? I also saw firsthand for myself how, honestly, I think dysfunctional the industry can be in terms of like supply and demand imbalances. And my thesis for the world going forward was that this would be an industry that would be in sharp decline during our lifetimes, our professional lifetimes. And it didn't make sense for me to stay with the boat, right? And part of going to INSEAD was to make a pretty dramatic shift in my career. So nothing that I do now, is even remotely related to,
To oil and
energy
gas,
sector.
yes.
Exactly.
Yeah.
And I don't really talk about it just because it feels like a past life.
Yeah. But how did you make that switch? That this seems like the triple switch is not that easy to make. What was your strategy, and how did you go about achieving those goals?
Yeah. Um, I think as with all things, maybe this sounds a bit reductive, but everything that we want to achieve comes down to basically three things coming together. Number one, do you have a goal? Number two, do you have a plan? And number three, do you have the persistence to execute and to keep going, right?
Mm-hmm.
And so for me, the transformation has been as a series of steps, right? So the very first step after INSEAD was I just jumped right into the deep end and tried to have a startup. I did that in Toronto with a couple of INSEAD classmates. We had some track record of success. We had some evidence, but it never really took off, right? And by all measures, you can just call it a failure.
Mm-hmm.
After that, I got a job, a corporate offer to do corporate strategy for Ericsson, which was interesting.
Where was that?
That was in Stockholm.
Got it.
Yeah. It was like an MBA program that they were recruiting for. And so I went in and did corporate strategy for them. And I got involved in this initiative at the C level to build a new cybersecurity business.
Mm-hmm.
When we passed that idea, I raised my hand to be on the founding team to go build that out. And that was based in the US. Right. And so I think that the lesson looking back for me was like, hey, you just got to go for it and like try different things. And to be able to navigate this uncertainty by accepting a certain amount of risk, as long as each move that I make is, let's say, net positive.
That's really well explained. It seems like the Ericsson, you became an entrepreneur and you started, building out that cybersecurity practice. How did that lead you towards your entrepreneurial ventures? Because you really, changed tracks even after INSEAD. You started with a startup, then went to Ericsson, and then, started investing, building all of that yourself. What happened in between? What was the inflection point?
Yeah. I think that out of my experience with Ericsson, right, and I'd at that point seen, let's say, both sides of a coin. Not to oversimplify things, but I'd seen some parts of the startup world and some parts of the corporate world. All right, and there are benefits to both, and I think truly my passion lies with the startup side of things. Right. And so my first foray, I don't think I'm very good in a structured learning environment. I've never tested well as a student by any means, but I'm, good at learning by doing, right? If I'm interested in something. Right. So just purely out of interest, I invested my time and capital into investing into startups. Right. And I did this through the INSEAD network with the Angels Group in Silicon Valley. And that was my entry point, just as a learning experience.
Got it. And what was your ticket size and what is this school all about that you mentioned?
Oh, sure. So let me answer the question a little bit of a different way and explain the progression, right? When I started out as an angel investor around 2016 or so, I was dropping tickets of maybe, let's say, 10 to 20K per startup on each deal that I did. Right? And of course, unless you're sitting on a big trust fund or you're independently wealthy already, those numbers they start adding up. And I always had this idea of, okay, well, once you figure out and learn something, like how do you systematize and scale it, right, and operationalize things?
Right.
For me, I saw syndicates as the way to do it, right? Because with syndicates, you're looking at a whole bunch of deals, in the end picking, very specific bets and having a thesis of why these companies could be successful, at least for myself. And it's not that much more work to basically expose that to other investors who are interested in these deals, right? And so this is something that I started doing in 2020. I ran my first syndicate in the middle of the year, around May or June. And honestly, the reception has been far greater than I expected, because I'm now sitting 8 months in of starting this journey, and I've deployed $2 million of capital, right, purely as a side hustle, right? So let's annualize that and say, deploying $3 million a year as a side hustle, which is like, it starts to get very interesting.
It does.
Yeah. And so, the question for me was, okay, how do I scale this up some more? Right. And that's partly the idea behind, there are two sides to it, right? One is, hey, it's a fellowship program. I'm going to give a select bunch of fellows specific real life hands-on experience on angel investing by being part of my investment committee. It's really learning by doing. And so I can help accelerate their pathway to do whatever I want, whatever I'm doing in, let's say, 12 months instead of taking 4 years. Right. And they can go off and invest in whatever drives them. It could be, blockchain in Europe. It can be social commerce in India. Whatever it is that drives you, these are probably things that I'll never touch because, it's out of my expertise. My goal is to give the program fellows the tool set to do this.
Got it.
But from my perspective, you can think of it as a scaling mechanism.
I when I look at your career, it seems that all of these interesting projects fit together. The angel school, the investing that you do, the venture building that you've done. So it all seems like missing pieces of a jigsaw puzzle coming together. Let's dive into each of them one at a time. Talk to us about the API marketplace that you built. What was the whole process like, and what were some key lessons that you have to share when you built and scaled that venture?
Sure. Let me take a step back and talk about API businesses, right? Just as a background for people who might be listening and maybe aren't that familiar. So API stands for Application Programming Interface. So this is just a very fancy way of saying computer systems talking to each other. Right? Now, in the last 10 years, a few very interesting happened around this technology of APIs, even though they've existed for about close to 30 years. Okay, but in the last 10 years, the industry, engineers largely adopted a common framework for designing and using APIs, something called REST, R-E-S-T. Right? Now that's important because now everybody has a common language to use this technology, right? Everybody accepts it. And if you know anything about software engineers, there aren't many times where they all largely agree on something. Right? So we have that situation. The second one is that APIs have proven to be a good technology for service distribution at scale. Right? So used correctly, an API can be a way to provide software with very specific functionality. Right? It could be, with your time at Microsoft, you would know they have a suite around computer vision and translation services. And all of these things can be done via APIs. If we look on, standalone companies that are built using APIs to sell and move product or service, look at Twilio. Today, they are a $50 billion company from selling calls and SMS. Basically telephony services. They own zero telco infrastructure. They are pure software play, right? So they have a market cap that's like bigger than some of the telcos, right? They basically use software to stitch these different the different infrastructure together, right? And so, but the problem is that if you're building a software application, you have a very long tail of needs. And if you look at the supply side, the use cases or the API providers do very specific things because they're solving very hard problems, right? So somebody might need a software developer might need a computer vision API from one API provider. They need to go to Stripe for payment processing. They need to go to Twilio for SMS. Maybe they need translation from Google. They need a PDF parser, and the list goes on and on. So the thesis of the API marketplace was, let's go build an aggregator, right? Let's go build an app store for APIs. Basically, that's the idea, right? And my thinking was, hey, if you can do this at scale, and Twilio as a company just moving SMS, they can be a 30 or $50 billion company, and Stripe can be a $100 billion company. This could be something that's insanely valuable.
Right.
And I think where the story gets really interesting is that this marketplace, like any marketplace, is a multi-sided business, right? And they're famously hard to get the feedback loops going between supply and demand. What I needed was something to kickstart the flywheel, right? This was my growth hack. The growth hack ended up being a partnership that I negotiated with a startup in Silicon Valley called RapidAPI. They ended up raising funding from Andreessen Horowitz and also Microsoft Ventures, and the story I've heard is that they actually sat in a room with like Satya, which is awesome, right? And, on the back of this investment, they were able to, we were able to grow this platform to become the world's largest API marketplace. And, we could grow it to serve million scale developers.
Wow, that must have been phenomenal. So what was your specific role, and what were the most important moments of building and scaling this out?
Yeah. So my role is that within, the corporate environment I was working in, I was, leading this initiative. It was something that was completely grassroots, bottom up. I just undertook, and I could see a pathway to getting the deal done, right? It was just, I just had a sense like, okay, there's enough here that I could like stitch the dots together.
Yeah.
And so what was really meaningful for me was that were the specific events where, we signed a deal with RapidAPI, and we actually launched the business. My mandate was to go build out the platform's footprint over in APAC, where the company had honestly, not that much awareness at that point.
What, if anything, was the contribution of some of the classes that you took at INSEAD? Did they position you to do something that you've been not too familiar with in the past life? Now do it well.
Sure. So if I look back at INSEAD, I mean, I would have to like specifically call out some of like the corporate entrepreneurship classes. I think Michelle Rogan in Fontainebleau taught that. The other one was, there was another professor who taught strategy, structure, and incentives.
Yeah, SSI, yeah.
Yeah, like really intense course, but like superb, right? I mean, that was all about like organizational design and how do you align incentive structures, etc. And we also like covered, I think, one module around building network effects. So I mean, I definitely like drew lessons there, and there were also practical learnings that I think you could only learn on the job, right? With my time at Ericsson, it's like learning to navigate in the corporate environment. It's one of those things you just have to learn and experience. It's not intuitive for a lot of people.
That is right. And Jed, so this was clearly going really well. This was a rocket ship by many standards. Why did you decide to focus and do other things as opposed to just being where you were and continuing on this rocket ship?
Yeah, it's a good question. I mean, maybe partly it's curiosity. Another part is, I have a certain level of like paranoia of not doing enough. And And so I'm always, I guess, thinking ahead, right, and planting options, right? Because in the end, I think that is the most probabilistically successful way to navigate, life and career planning is kind of like what we encountered during job search graduating from INSEAD, right? Which
Yeah.
is to say, you want to do as many interviews as possible. You want to have multiple offers and you want them to mature at the same time. So you have maximum leverage because, well, options all have value even if you don't use them, right? Because you can use them to trade off against the other.
Yeah.
And I think like in that same way, um, in life, right? I'm always thinking ahead, like directionally, what do I want to achieve? And based on this, what are the options that I should lay down, right? In the end, the way I look at things right now is what I want to do is to have my time unencumbered,
Yeah.
right? So to be able to maximize the amount of free productive time that I have on my hands to focus on really productive things, right?
Yeah.
In order to do that, you need to be financially unencumbered, right? So what is the pathway to do that?
Hmm.
And along the way, of course, you want it to be rather enjoyable,
Of
right?
course.
And you narrow all of these things down, then I know the things that are interesting to me are I like the 0 to 1 of, building a new venture from the ground up. I'm good at the operator side of the table, and I like developing that skill set. I like investing in companies because I see it as an effective way to channel capital to productive use, right?
Right.
To my mind, today, venture is the only asset class where you can systematically generate multiplier returns. I use the word systematically. All right. People, might talk about things like crypto and Bitcoin. I'm not saying there isn't money to be made. I'm saying, what is the systematic play here, right? This is my
Yeah.
view.
Hmm.
And so, when I look at this, it became very evident that being more involved some way, in the startup community and investing, where those paths intersect, that made sense for me to lay options down in.
I really like this answer. The way you explained autonomy, mastery, and purpose, three elements of meaningful work. You touched upon autonomy very clearly. And when you want to be financially unencumbered. So I really love the way you approach this question. And I think all of us have this ambition and curiosity to do more, achieve more. Um, and heaven knows where that comes from, but it's a useful thing sometimes. So you've built out this marketplace, things are going really well, and then you decide to repivot your career because you want to challenge yourself and not to have too much regret long term. So how did you decide your next steps? You were interested in, say, venture investing, venture building as an asset class. How did you structure your next steps and connect the dots to what you do today?
Yeah. I've this view, Utkarsh, that in life, when we are navigating situations of honestly like great uncertainty, you
Mhm.
just need to be directionally correct.
Yeah.
None of us are like really that good that we can project life, with perfect certainty. I don't think that really exists, right? Although we like try to tell that story in like a job interview or something. Um, and so for me, I always had this view of, hey, I want to be directionally aligned towards investing and like working with startups, right? And that really in some way was what triggered, my entryway into angel investing, right? Doing that, I think was a way to plant seeds early on. Because, you'll know as well as I do that the only thing that none of us ever can like buy is time,
Mhm.
right? So the more you can do things in parallel, the more you can advance these things while you've got something else going on, the more it's to your benefit because these end up, becoming options, or some of them become options for you that you can take advantage of.
And these options are critical, as you alluded to the fact that optionality has value even when we don't exercise them. So you've built out some of that optionality for yourself. Some of these deals are coming through. How does one get to invest in a unicorn? Tell us the secrets.
Yeah. So I don't know if there is a secret formula that you can follow, and if you tick all these boxes, you would, get there. I would say that there are specific things that I look for, right? Part of it is I look for companies or ideas that are, let's say, truly groundbreaking, and if successful, they can open up, multi-billion-dollar segments, right? So the case in point, a company like Turing is the company I alluded to that I think is going to be my breakout unicorn. What they do is to provide elite pre-vetted software engineers on demand to tech companies.
Yeah.
And it solves a real pain point in industry today of basically labor arbitrage, right? So think about tech centers like Silicon Valley, where the starting or entry level developer salary might be $200,000 or $300,000 because all the tech companies are trying to recruit from like 30 miles. And Turing has this saying, which I really love. They say, talent is universal, opportunity is not. And if we're being really honest, it really is true. There's a lot of smart, talented people around the world, but the problem is access. Right? So that's the problem that they want to solve. So I saw that as a huge opportunity. The next thing I looked for was that I think they were at the right time where they had several tailwinds moving them forward. Right? So if you think about this idea of outsourcing of software developers, there are plenty of market parallels that tell you can be a huge business. Okay? And that's great. What Turing's secret sauce was going to be was that they were going to apply machine learning and data science to massively automate this process. So you think about a platform like Upwork today, right? If you ever use Upwork to find a designer or a software developer or a copywriter, you'll know how necessarily tedious it still is, even though by all standards, Upwork serves a market need very, very well.
Yeah.
And I thought with Turing's focus solely on software engineers, and if that gives them a chance to be very specific in a niche that's big enough. And if you automate that all the way, you just get this huge scalability effect. Right? So you can go really big and solve a lot of these problems. And the last point I make is that, or let's say I'll make 2 points. One is that in terms of tailwinds, Turing was positioned in a really the right way, in that we see tech companies having fully remote and distributed teams, right? Because the first time in history, technology is good enough, right? You've got these collaboration software, you've got Zoom, whatever it is, to enable this. And not only are these tech companies adopting it, but we've seen in examples like Zapier and GitLab that, hey, you can be hugely valuable. You can be $1 billion company being a remote, having a fully distributed team.
Yeah.
And the last point was I just really love the founders, like Vijay and Jonathan, the founders. I can't say good enough about them, right? I'm an advisor to the company, but honestly, they need very little help from me, which just is a testament to how good they are. And I think on the back of these things, it drove my investment decision in the company.
Got it. How does one, thanks so much for clarifying and sharing such clear mental models for investing. But one challenge is that some of these companies have way too many people willing to invest. So how does one get access to prospective unicorns? How did you get access to them? How did you tap into the network? How does one decide how much to invest? Could you shed some light on that?
Yeah. Absolutely. So I think if you're starting out as an angel investor, writing fairly small checks, right? You're not an established fund. You don't have a big pool of capital that you're sitting on. Um, the only thing that you can do is to honestly just go early stage, right? This is when your $25,000 of capital, whatever that amount is kind of meaningful that you have a chance of the company taking it, right? The second thing is network is really important, right? In the end, why a lot of, the value that you bring through network capital is probably the same, has the same foundations around
It
this,
does, yeah.
right? Network gives you credibility. So if you like a company, do you have enough clout? Do people respect you enough that if you ask for a warm intro to somebody, that they would walk you into the door? Would they do that for you, right? I mean,
Yeah.
those things really matter. I guess the third lever you could pull is to like join somebody else's syndicate. I mean, I love my own syndicate, but I'm not here to plug my own syndicate, right? There are a lot of other great investors out there, and this can be a way for you to get into a company that might otherwise be inaccessible, right? Because they
Yeah,
might require you to write a 50K check at a minimum, and it's beyond your threshold.
understood. So
Yeah.
tell us how you went about it. Which year did you invest in this potentially breakout investment of yours, and at what level did you get in? And what advice do you have for people to tap into specific networks? So tell us your story, and then connect it to your syndicate that you've built today, and
Sure.
then we'll discuss the angel school towards
Sure.
the end.
Yeah. So I think with in this specific case, I scout all the time for companies that I look for, right? So some easy things to do, like look, there's plenty of information and resources out there today. All the best accelerators would have demo days, right? And
Yeah,
all of these demo days have recordings. Like it's not that much of a leap for somebody to invest the time and effort and to be disciplined about attending these demo days or watching a recording. Right? I've also cultivated my own sources of deal flow. These are other investors that that co-invest or invest in the same sort of sectors that I do, and we sort of trade deals around, right? And this can be a good way of information sharing, and getting access. In Turing's
understood.
case, it was a pure cold call. I saw their demo day video when they were graduating out of Stanford StartX Accelerator. I saw the 3-minute pitch. I liked it a lot, and I did a cold outreach to them, right? And I said, hey, I'd love to talk. Here's a bit about me and why you should consider me, right?
Hmm.
And in the end, it all worked out. I was early enough in the process where and we liked each other enough that there was a deal to be done.
That's phenomenal. And your syndicate, what's the thesis like? How do you scout at scale, and how can others become part of your syndicate?
Sure.
And why should they choose you?
Yeah. Yeah. Great questions. So what I focus on is I focus on late seed to Series A companies. And my sectors that I focus on are enterprise software, SaaS, deep tech, and anything APIs.
Got it.
Generally, it's broadly software sector. I don't like capital intensive businesses. I don't like hardware businesses. I don't like businesses with a lot of regulatory risk, med tech or biotech, stuff like that. And it's out of my sphere.
Mm.
To be part of my syndicate, you can go to angel-school.co. There's a sign up form, and you fill that out, and then you get access to my deal flow via my newsletter, my mailing list. Right.
That's epic.
No, thank you. I figured out like my own system for this. And why I think my investments, or why my model works, is that here's a few things, right? One, With a syndicate investment, it is unlike a traditional fund where you park a bunch of capital and they deploy it for you, right? And you get investor updates. That's more or less the deal.
Yeah.
With syndicates, investors are going in on a deal by deal basis, right? So they get to pick and choose the companies that they like to invest in. And if they don't, they can walk away. No harm done, right? My mailing list is big enough that I can fill the allocations. That's not an issue. Why you should choose me? I would say that two reasons, right? One is I have deep conviction in all the companies that I back. So in a lot of cases, before the syndicate before a deal makes it to the syndicate, I've invested in the company, maybe 1.5 or 2 years earlier. Already. So I've taken on that risk much early on because I, believe in the company, and my belief or my thesis has been correct up to this point, right? That's how they make it to the next level. And the second point for my investors is I promise a maximum alignment of interest, right? So going back to strategy, structure, and incentives.
Yeah.
What that means tangibly is that for my syndicates, I basically make no money up front. Okay. So whatever we take up front goes towards covering a hard cost of my diligence process of setting up the legal structures, the SPVs. We minimize that in order to maximize capital deployment. And if the company is successful, I take 20% carried interest, which is a fancy way to say 20% of profit upon an exit event, right?
Got it.
So take a simple example. Let's say I deploy $250,000 through my syndicate, or just for simplicity, let's say $500,000 through my syndicate. And let's say that the company we invested in make an 11x return, right? So 500,000 becomes 5.5 million. This basically means this means that there's $5 million of profit. And so we apply the 20% carried on interest on that, right? So that's a simplistic example, but that's the basic math.
Right? Got it.
My goal is to take your investment, turn it into that multiplier and cash that out, right? Super. I make nothing up front. I don't take a broker's fee or a kickback from the company, none of that, right? So it's a very clean model and, again, alignment of incentives.
Do you have a geographical focus or you invest all around the world? And what are the legal and regulatory things one should be aware of before joining your syndicate?
Sure. So I only invest into US companies. And that's not to say I don't believe in entrepreneurs or founders in other countries. This is mainly a practical matter. Today, on my investor network, I would say 80% of them are outside of the US, which basically means that they would look at the deals in the US and they would be willing to do the paperwork, etc. But it's very hard to compel that for another geography where they're not familiar with.
Understood. No, that's an important point. I made some early stage investments, Gumroad, Backstage Capital, and a tech stealth mode company. They're all, North America based. So there's definitely ease of investing that exists. Tell us how you divide your day, Jed, because it seems I know you're an outdoors person as well. You do a lot more than just work. You have 3 parallel, really busy projects going on. What does a day in your life look like? And how do you allocate time to all your myriad projects?
Probably not very well is the realistic answer. I think I just end up taking on too much and then dig myself out of a hole slowly. No, but I mean, jokes aside, for me, my day, time is the most precious thing, right? So I want to make sure that it's the most productively used. My work spans, all continents and all time zones. So in the end, getting through the day is pure hustle, which is to say, like, you stack the day as much as you can. I start first calls typically at 8 a.m., ready to go, and on a long day, they might go to like 9 or 10. And if I can be good to myself, in the afternoon and take a couple of hours off or something, then I would.
Super. So where does Angel School fit in? Is that your primary project now? Give us a flavor. And the reason we're asking this question is because there are lots of young professionals who are building like a portfolio of careers, like an investor in the morning, a writer by night, a musician in the evening. Now, you're not that extreme, like a lot of your projects are interrelated, but how do you divide your attention? What does context switching look like to you?
Yeah. So I guess for me, the main activities when it comes to the deals that I do, that's pretty, I want to say pretty lumpy, right? Because, whenever I'm setting up a deal, there's maybe a 2 or 3 week sprint where there's a lot of research. There's a lot of heavy lifting around getting paperwork together. Because I do all the work around preparing a data room and writing an investment memo for all of these companies so that they are investor ready, right? The goal is to do the work up front so that when an investor walks into like a data room, they have 85 or 90% of what they need to basically make a decision on the deal. And I'm just trying to close that last 10%. So that happens. And then with Angel School, I'm currently recruiting for my first cohort. We haven't started yet, and I'm still strategizing on how we would go. I basically done all of one LinkedIn post in terms of organic marketing, and I've gotten something like 27 or 28 applicants from 10 different countries applying to the program, which has been phenomenal. Yeah. There's basically one thing that's holding me back right now from kicking off the program, right? And that is I have an underrepresented female population in the cohort, right? I think you'll know that for venture, the gender ratio is pretty biased to start with. It's probably 85%.
Unfortunately, it is, yeah.
Finger in the air. So I'd like to do a little bit better. And if it's going to take me a little bit more time to like find the right candidates to be female candidates to be part of the program, I'm willing to accept that, to a degree.
I think this is arguably my favorite part of, the many, many, many interesting things that you've said. It's so true. Like gender diversity is critical in venture, in entrepreneurship, and you're doing active measures. It just speaks very highly of the core values behind Angel School. Network Capital is, of course, a partner. We'd love to support you, recruit your cohort, and do targeted marketing among lots and lots of folks who might be interesting. Women, for example, are a big component of our investing fellowship. That's our version of the cohort-based classes that young professionals take to learn things like product management, investing, writing, public speaking, etc. So the philosophy behind Network Capital cohort-based courses and Angel School's cohort-based course is very similar. So you obviously have full support from our side. And I love the fact that you're actually trying to share your knowledge at scale. So wish you all the very best for this first cohort. And how have you priced it, or how are you defining the selection criteria? Who should come? Are there scholarships available? Give us a flavor of that.
Sure. So my immediate goals for the first program is to basically just beta test and like stress test the curriculum. Right? The way I plan to run the program is as a real life investment committee, right? And they're going to be part of my team, and they're going to do all the work in order to learn the fundamental building blocks of building and running your own syndicates, right? So there's three things. Number one is you have your own investment philosophy and sources of deal flow. Number two, you are credible enough and you have your first, let's say, 100 or 150 investors who are willing to back your deals. And number three, you understand all the mechanics of what is required in order to run the syndicate by yourself. Right?
Got it.
And I think there is no way to learn except by learning by doing. Reading and attending, one directional courses, it only takes you so far, right? There's going to be 10,000 things and edge cases you hadn't thought of, and all of these things, right? So this is why I believe in that philosophy. I don't intend to charge any fees for the first cohort, and if I do in future, fees will never be the thrust of how I make money, right? Again, going back to alignment of interest, I believe in this ethos, right? If I charge fees, it's basically a seriousness fee. It helps me cover licenses and software tools and some hard costs that I'll incur. But in the end, this is going to be a scaling mechanism, right? This is how I go from deploying $3 million a year to, let's say, $10 million a year. And if I'm deploying $10 million a year, that's equivalent of having, let's say, a $50 or $60 million first fund, right? And Utkarsh, while there's a very competitive side of me that says, I want to go raise my own fund just to say that I did it, just for the hell of it. Think about this model of deploying $10 million of capital a year and still being, let's say, more unencumbered, right? Rather than being tied to a 12 or 13-year fund life, which is that's all you do. I need a number bigger than 50 million in order to do that, is my point.
Yeah. Hey, more power to you. Before we conclude, Jed, any parting advice for millennials, young professionals who are trying to become venture builders, venture investors, any books they should read, any people they should follow, apart from, of course, joining the angel school or applying for it?
Sure. I'll throw out some key resources, and then I'm also going to offer up one piece of advice, whatever that's worth. Okay. Key resources, go read Jason Calacanis' book called Angel, very simply titled. Go attend Techstars Venture Fellows course. It's like a 6-week or completely online program. It's free. It's a great source of learning. And the last, I'm gonna leave by giving one piece of advice, right, to younger professionals who are earlier in their career. It is this: if you are a working professional, you have a steady job, you are learning and you are developing. For most of us, the cost of failure or the pain of failure is more psychological than it is existential, right? Failing at something like screwing up a job interview or trying at a startup for 1 year and then having it go nowhere, those lessons are more invaluable to you. Those learnings are more to you than the pain that you feel going through it at that time. Right? And those things make you a better person. And ultimately, they don't hurt you in a real existential way, like being out of a job or your family's out on the street. It's not that sort of risk, right? So bear that in mind and internalize that, factor that into your risk reward calculus.
Love it. Thank you so much, Jed. This was a delightful conversation, and I can't wait to have you back with us next for the summer school. Imagine teaching angel investing to kids. That'll be fun.
Yeah, I appreciate it, Utkarsh. Thank you for setting this up.